Hello everyone, this is Tina from Tina Zen Group, business and commercial broker agent in California. So today we're going to discuss about contingencies in an asset purchase agreement. So why does it exist? Well, it's because buyer wants to actually get the deal before they spend a lot of time doing all the due diligence. So as we know that due diligence could be ranged from 2 to 6 weeks, for example, for smaller and simple deals. So usually they would like to agree and then make sure that they have the deal before they actually spend the time and efforts doing all of that. So typically a deal will enter into asset purchase agreement under the contingencies. So what are those contingencies? One is the buyer's due diligence. So within certain time, buyer will ask certain questions that they would like to get answers from the seller, and then the seller will provide those answers, and then the buyer will have certain time to review and evaluate those answers. So that's called buyer's due diligence. Another contingency is that almost concurrently with buyer's due diligence is the seller's due diligence. Why do they do that? It's because they want to make sure that the buyer is qualified if they need a loan, and it's capable, and then also have the resources to actually take over the business and then keep it running. So mostly the sellers would like to see the buyer succeed. So of course they will ask questions, and so they do have some time to ask questions. The buyer will have some time to answer those questions, and then the seller will have some time to evaluate the buyer's response and then see if the buyer is qualified. So those are the two contingencies. The third contingency is the lease. The lease, because most of the business will have the physical location, and most of the time the buyer will just take over the existing lease from the landlord. And so then they need to make sure that they apply for the lease, and then the landlord actually approve their application based on their credit, their capability, their financial situations. So everything put in together is that ultimately they reach agreement, and then there is a lease contingency, right? So, and occasionally the buyer will try to get a new lease and will renegotiate the terms. And that happens sometime, although we all understand that that's going to take a longer time. So that's the third contingency. The fourth one is the financing. Sometimes the buyer needs to finance the deal, want to get a loan or SBA loan from the bank or other lenders or capital partners. So it's important that they check off this checklist, right? And so then they can be funded, the deal can be funded, can be financed. That's another contingency. So the fifth contingency here is the license transfer. So for example, the buyer needs to be clear in their background, doesn't have any criminal background, because if they do have some records that's going to prevent them from getting a license, then that's going to be an issue when they take over the business. That's why there's a contingency there for a buyer to be qualified and be able to transfer the license. And a lot of times they want to check before they actually close the deal, because they want to know that they can actually get the license. The last contingency, which could be some other contingencies as well, but this is a typical one, is the franchising contingency with the franchisor. So any deal has to be approved by the franchisor, because the franchisor needs to know that which location is the franchisee picking the location, right? Are they going to acquire this location, this business? And then so if so, what are the terms with the lease? And also they want to review the business assets as well, make sure it's a legitimate deal, and also it's a deal that's going to be feasible for franchisor. So that's another set of approval that's needed, and that's why there's additional contingency. So anyway, so that that's it for most of the contingencies in the asset purchase agreement. And so thank you for watching, and we'll talk about something else next time. Thank you. Bye bye.